All right, guys, so let's have a serious discussion today. No fluff, no nothing else like that. We need to talk about Palantir and the potential S&P inclusion that we all know is inevitably going to come at some point in time, and what it actually means to the stock. There is so much poor information out there that I figure, hey, we need to talk about this because a lot of folks are making decisions based upon something that is absolutely not true. So I want you guys on the right track so you can make a lot of money on this and not suffer a lot of disappointment, more importantly. Just make sure you like the video if you like getting the truth without the hype. Now, let me be upfront and honest with you guys. I have been fighting this battle about what is and what is not a catalyst for a stock for what seems like my entire time here on YouTube. Before YouTube, in my investing life, which has been going on now for 25 years almost, I never heard of so many different things being catalysts for a stock that are absolutely not a catalyst for a stock until I get involved here on the YouTube space. So it's definitely something I see that where a lot of us retail investors, small investors, we're going places for information, and there's much more bad information than good information here. Those are just facts. That's just the truth. And I'm not saying my information is perfect or anything else like that at all. And I'm not even saying other folks are, being nefarious and intentionally misleading folks. But that doesn't negate the reality of there's a lot of misconceptions around catalysts for the stock. There's a lot around S&P inclusion, what it means, what it doesn't mean. There is both goods and bads to this that we need to break down and discuss, especially in regards to Palantir, because there's a lot of folks positioning a certain way, making certain decisions. And I don't play with options personally, but there's some of you guys out there that are playing around with option plays and other things like that, thinking when S&P inclusion happens, this is what happens next. And unfortunately, you're being set up for failure. So we discussed this exact thing in my group just a few weeks ago. And so I'm going to play that here for you guys today because you need this information. So that way you don't make the same exact mistakes that a lot of other folks are going to make who have the wrong impression of what this does and what it doesn't mean. So let's jump into the video. All right, guys. So a discussion popped up in the group and I kind of want to talk about it here a little bit. And that is S&P inclusion being an actual catalyst for a stock. So let me kind of answer this question here because the answer is a little more nuanced than just yes, it is or no, it isn't. It's not as clear cut as a lot of other catalysts that go on with stocks. So if you're asking me, just in my opinion, how I would categorize it, I would say it is not a catalyst for the stock. Now, hear me out before you actually get there because there's one massive positive that I'll give you here in just a second here that shows you why it's very, very important, but I would not call it a catalyst for the stock price. Remember, we've got to keep those things kind of differentiated, and you got to kind of understand, in terms of what stock price is versus what something that's very, very good for the stock is over here. They don't always need to align and need to match, i.e. there's a lot of great things that go on with stocks that have absolutely nothing to do with the stock price itself. So let's kind of break those down a little bit here. So for me, I don't necessarily consider it a catalyst because it adds in the end, of course, I know there's differences with, what the float is and it can adjust the numbers some and all that sort of stuff. But it's not a massive, massive catalyst for a stock because it adds nothing to the EPS line. It adds nothing in terms of revenue. It adds nothing in regards to the performance of the company. It's not a new product that all of a sudden is just going to print billions for the company, year in and year out. That's a catalyst for the stock. That's something that I can tangibly point to and say, hey, that adds to revenue number. I can see exactly where that hits the financials and how that propels the stock price forward, more importantly. Now, I understand there's a lot of different factors involved to where you may very well get an EPS bump up depending upon the float and a lot of other things. I understand that. I'm not trying to get into a technical debate where you pick a stock that has where it would make a significant difference. And over here, I can choose a stock where it makes absolutely zero difference. I'm talking about we get so confused and people get kind of upset and not necessarily confused, but it gets very, very blurry as to what is an actual catalyst for the stock. The idea of the float and everything else like that, a lot of those things get taken out because it's not like all of a sudden S&P day happens, inclusions here, and then the next day all this money floods into the stock and here it is, a huge catalyst. It's announced months in advance and companies start taking up their positions in order to adjust for this ahead of time, well ahead of time, and it's kind of done gradually so that way there isn't a lot of volatility with the stock, if any volatility with the stock, as it moves closer to S&P inclusion. But I also don't want to say it's not very, very important to the stock, but to me, the benefit is long-term in regards to the stock itself, because what S&P inclusion adds is it adds stability to the stock price. Now, I understand Tesla being the exception here with all sorts of, it's just wild, but the vast majority of the companies that get added to the S&P become more stable the more and more years that are there. And that's simply because when a stock hits the S&P and all the funds that have to buy it have to buy that stock, they're typically not trading in and out of stocks, all the time. They're typically long-term holders. It also then, after inclusion, hits the radar of some of the larger, institutional type investors. Now, again, they're not going to overpay for the stock. They're not going to pay for a hype run. They're not going to push it to some crazy high either. But they're going to start looking at a stock that gets inclusion in the S&P. Now, all of a sudden, it's on their radar. Before, they might not even look at a stock until it's kind of met those wickets, because they kind of use that to kind of, as like the stock screener per se, right? They're not going to deal with all the craziness and do all the research and try to figure out who the winners and losers are going to be out of stocks that aren't necessarily all the way there yet, who haven't hit profitability, who haven't done a lot of other things. They're not going to engage in that game there, because they know, hey, out of all the stocks that are, potential winners, there's only going to be 20, 30, maybe 40% of them that win, which means you're going to lose more often than you win. They're not willing, especially at their levels, considering they're normally looking at capital preservation, right? More so than appreciation. They're looking at capital preservation. So they'll let, the S&P folks do all the work for them per se. All of a sudden it gets added. Now they're willing to come in and start buying those stocks. It hits the radar. That does not mean that they're going to buy your specific stock that's hitting the S&P. There'll typically be several added. But the point being, it just puts it on the radar there. Those types of investors are the ones who tend to buy and hold a lot more than the traders and the hedge funds and all the other investment funds out there. Those institutional buyers are just looking for stocks that can buy and hold over the long term. So it adds some stability, because it's taking those shares out of the traders' hands and putting it into long-term buy and hold investors' hands over here. So it absolutely adds to the stability. And that right there, to me, is the biggest benefit to a stock hitting the S&P, is because you start getting and you start building. And remember, this takes time. This can take years, but you take the first steps and building out an investor base that's not going to just wildly sell out of a stock because a negative news article came out or because of an analyst downgrade or anything else like that. I'm not saying the stock won't move up or down based upon those, but they're not looking to just, what's the news today? Oh crap, man, I need to sell it right now. Or, hey, is it getting ready to cross the 200-day moving average? Maybe it's time to take some profits. Those guys aren't looking to do that. And so it takes it out of the traders' hands and move those shares over here, which starts to stabilize the stock price. Also think that puts it on the radar of like pension funds and insurance companies and other folks like that hold equities to provide returns for their investors they're not going to trade, and they're not looking to get in and out. They're just looking for solid investments there. So that's kind of the investor base that you start to build whenever you have S&P happen. So to me, not necessarily a catalyst, but it's a massive positive. You just got to understand the timelines here. It's not a, hey, one day it's over here, then the next day it's over here. It's, hey, one day it's over here, it gets announced. And then the funds that have to rebalance start rebalancing over the course of, weeks and months. And then over here on the institutional side, they start the buy-in there, but they can take years to build out positions in some cases. So don't think it's this massive influx of things. I know that's what YouTube says and all that other stuff like that. Just ignore that sort of stuff. So anyways, I think it's a great thing overall. I just want to make sure I'm very, very clear that in the end, it doesn't add a whole lot, if anything, to EPS. Clearly adds zero to revenue at the end of the day, and things that do add revenue end up being actual huge catalysts for the stock in the end. And so I just kind of wanted to make sure we kind of delineate that out and start thinking that way. Whenever you think about, is this a catalyst or not for the stock, the first thing that I look for is, how much revenue does it produce and can they make money off of it? Those are the first two things that I think anytime I hear anything. You want to talk to me about Optimus with Tesla? Great. Tell me when it's going to make money and tell me how much the profit margin is going to be on that product. Nobody can tell me that right now. Therefore, we have no clue. That means it's speculation, not a catalyst. And those are very, very important distinctions that you've got to make there. That's what gets people in trouble, is because they start including it in their valuations. And then, of course, when you find out, oh my gosh, it's not happening next year, like Elon said, it's on Elon time, which means it could be 2 years from now, it could be 4 years from now, it could be 6 years from now, it could be never, who knows? Not every product's successful either that he launches as well. That's when you start figuring out that you get yourself in trouble. So let's make sure, you kind of ask that question first off, right off the top of the head. Hey, how much revenue is it going to add? How much, EPS bottom line is going to actually come from this in the end? And then at that stage, you have a much better answer as to whether or not, or at least a better avenue to pursue, is this a catalyst or not for a stock? And remember, if you want videos like that, you want to see all my buy and sell alerts in real time, you want to take 5 courses for free, get free coaching, take advantage of our stock analyzer tool, be a part of the best 6, 7, and 8-figure Discord out there, get all the exclusive videos, all the exclusive posts. Guys, there's so much involved in the group. Make sure you take advantage of the pinned comment before the Match Madness sale ends and the price goes back up forever. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching. and we'll see you in the next one.